Good morning, good afternoon, and welcome again to the latest ADM Agriculture YouTube grain market update. Well, it's been a really interesting time in all global markets in the last week. Actually, wheat markets week on week are largely unchanged, but we've seen a huge amount of volatility to get us here. The markets have, I would guess, largely ignored now the somewhat underwhelming USDA report that was released last Wednesday, and refocused on weather issues and the continued tensions between Russia and the Ukraine. Obviously, there's been a lot of conflicting news stories coming out of the Russian crisis, and it's making, well, frankly, it's making the trade very, very nervous. We continue to be buffeted by these geopolitical crosswinds. The expected Tuesday night raid that was rumoured to be taking place by the Russians over the Ukrainian border thankfully didn't materialise. We've now got Moscow claiming troop withdrawals, whilst NATO's counterclaims say that there's no sign of de-escalation. And I guess all of this comes at a backdrop of the NATO Security Council suggesting that as a result of Russian action, there's going to be more Western allied troops put along the Eastern Front. It's all, well, frankly, it's all very, very troubling. As a result of this, the market remains incredibly nervous. But to be honest, it rather feels like the old crop market could run out of steam if the trade could only be sure that the Russians would behave themselves and stop threatening to annex another part of the Ukraine. New crop, however, does seem to have more support, and there's a few weather issues starting to creep in. The US and Canada remains dry, as does Kazakhstan and parts of southern Russia, and now Spain is also raising some concerns too. Domestically, London wheat remains a bit of a follower of outside markets, but it's our domestic cash markets that have been really interesting of late. We're seeing some all-time high domestic cash premiums, particularly in the north of the country. And I think probably old crop UK futures look cheap by comparison. The cash market is doing its best to try and solve regional supply issues, and the UK has now priced itself out of any exports for sure. I suspect we may even see some imports start to flow into the north of the UK, and maybe even some wheat gets shipped out of the south coast up into Scotland. Strange times for sure, but hopefully providing lots of opportunities. I've got my colleague Freddie Humfrey with me, our expert technical analysis, and I guess in these uncertain times it's always an interesting add-on to look at the markets from a technical point of view. So we're going to take a look at the London wheat markets. Freddie, what do you make of those?
Yeah, thank you, Jonathan. Not sure about the expert bit, but we'll go with it. So thank you. So just starting off with, we've got the daily May 22 London wheat chart up there. And it's certainly quite an interesting chart. We're just going to re-highlight that head and shoulders pattern from the high back in late November that we saw at 244.95. And as I say, re-highlight that because when you look at the most recent price action, the market really tried to retest that second right-hand shoulder at that recent high at 228 at the back end of this month, and it really failed. So we've got a really classic picture there in terms of the head and shoulders. The neckline was broken on the right-hand side, and then we retested that right-hand shoulder and failed. So from a technical perspective, it's almost starting to look a little bearish again, and we would like to see a close below this 219 level that's been quite stubborn in recent periods. And then once we get through that, we're going to look at a retest of that 212, 213, where we've highlighted that support. So, yeah, head and shoulders just being retested and failing on that retest, so potentially technically downside to the market in the current guise.
Okay, and NOV 22?
Yeah, the NOV 22 isn't so clean cut. As you can see there, a couple of Andrew's pitchforks, the longer term uptrend versus the short term downtrend from, again, that high in 24th of November, just giving us a really nice window of compression Now, recently the highs have not been lower, unlike in May. So we've not got such a bearish short-term picture, and arguably actually that bottom prong of the uptrend on that Andrews pitchfork just giving the market overall support. So yeah, two quite conflicting technical analyses of the two contracts there. The May slightly bearish, the NOV slightly bullish.
Yeah, interesting, Freddie. Thank you for that. It's a really challenging time in these markets, an awful lot going on. But as always, we're keen to hear your comments. Our contact details are at the end of the video, and please reach out to us. It's always good to hear from our customers and viewers. Thanks again for watching, Freddie. Thank you for your time. See you next week.